Are Tesla's shares heading for another all-time high, or is it time to take your profits and find something else to invest in? My name is Rauchenwald, and in today's video I'm going to share my Tesla chart analysis with you based on Elliott Wave Theory. But before we get to that, as always, let's get the usual disclaimer out of the way. Everything I share in this video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions and make your own decisions. With that out of the way, it's time to take a look at Tesla's long-term chart and let's see what to expect next from Tesla's share price. Now, outside of my videos, I'm usually relying on a software called Wave with their Elliott Wave Lite license, since it offers a bunch of features that make things much easier. But for the purpose of this video, I'm going to use TradingView, since it's a free platform that each one of you can also use by following the link in the description below. Looking at Tesla's chart since their IPO, you can see that I already have some labels in place, and if you're wondering what those numbers and letters mean, I'd recommend that you check out the video I put in the card up here that explains the basics of Elliott Wave Theory and also shows how I ended up with the current labels on the chart. To keep things simpler here, I'm just going to summarize what we have here. The first 1, 2, 3, 4, 5 pattern here is a so-called impulse wave since Tesla's IPO and indicates that wave 5 ends with Tesla's latest all-time high at $1,243.49 in November 2021. As a result, that entire 1, 2, 5 impulse wave becomes wave 1 of an impulse of a so-called higher degree and should now be followed by a corrective wave 2. As indicated on the chart, that wave 2 often reaches the area of wave 4 of the previous impulse of a smaller degree. In other words, wave 2 is expected to last until Tesla reaches the indicated range of $35.40 to $58.28 per share. I'm aware that this seems like an extreme drop in value, considering that at the time of recording Tesla just rose from around $600 per share to almost $900 per share. However, that doesn't change that according to my interpretation of Elliott Wave Theory, this would be the next price target. But obviously not in the next couple of weeks or months, but likely over a period of years. That doesn't mean that Tesla won't have any rallies in between, because just like wave 1 consists of another impulse wave, the corrective wave 2 also will develop in the form of any of the existing corrective patterns or a variation of corrective patterns as explained in Elliott Wave Principle and on our one-page cheat sheet that we have here. Based on historical data, there is a 42% chance that the corrective pattern will be a simple zigzag, as shown here, labeled as ABC, and a 40% chance that it will be a flat correction, which also would be labeled as ABC, but follows slightly different rules and guidelines. The remaining 18% would point towards either a double zigzag, a triple zigzag, or a corrective pattern called a double three, but since all of those three patterns are combinations of other corrective patterns, we won't worry about them for now. To determine how Tesla's share price is likely going to develop in the near future, we now have to look a little bit closer, starting with the weekly chart since the November 2021 all-time high that indicated the start of our corrective wave 2. Since that wave 2 also consists of waves of lower degrees, and we already know that with 42% the most likely option is going to be a so-called zigzag, we can look up the details for that corrective pattern and learn that wave A in a zigzag consists either of an impulse wave or a so-called leading diagonal. Both would be labeled 1, 2, 3, 4, 5, with the main difference being that in an impulse wave, wave 3 never enters the price territory of wave 1, while in a leading diagonal it always does. So looking at this, it would point towards a leading diagonal, which could also just be wave 1 of another impulse wave or leading diagonal of a higher degree, which is likely the case here, since if this 1, 2, 5 pattern would already be the entire wave A of the ABC zigzag corrective pattern, we'd never be able to reach the price channel indicated earlier of $35.40 to $58.28 per share. So our actual wave A in our big ABC corrective pattern would likely end up looking more like this. As a result, it seems like we're currently in the progress or at the end of wave 2 of the 1, 2, 5 impulse wave or leading diagonal that will eventually make up wave A of our bigger corrective ABC corrective pattern. Just like earlier, we could now again look closer on the daily chart and again try to identify the next wave pattern of a lower degree to see how far along this wave 2 already is and if it's time to sell or if there's still room to grow. However, to not dive too deep into that rabbit hole here in this video, we are going to make things easier and add a Fibonacci retracement ranging from the start of our wave 1 at the all-time high back in November 2021 to the end of our wave 1 at the recent low in May 2022 to give us a rough idea of how things are likely going to go short term. Here the important Fibonacci levels are 61.8%, 50% and 38.2%, as those often mark the end of second waves and as such give us an idea of where the price will likely turn around. And based on all of that, my personal opinion is that Tesla's best case scenario would be another roughly 10% gain from the time of recording to reach the $1,000 per share mark before it will resume its downwards trajectory in wave 3 of our impulse wave or leading diagonal that is going to form wave A of our corrective pattern on a higher degree. Now I understand that many of you might disagree with that assessment. I'm sure there are going to be some then go ahead and short it comments as a result as well. To those I can already say that I rarely short individual stocks, but that I'm in general short on almost the entire market for investments in SPXU and SQQQ since the middle of December 21. Last but not least, I'm also curious to see how things play out and how accurate this prediction will turn out to be over the next couple of months till the end of 2022 and beyond that as well, but I guess we'll just have to wait and see. Anyways, that's it for today. If you have any questions, feel free to leave them in the comments down below or on any of my recent posts on eToro as well. Thanks for watching, see you in one of my other videos. Till then, bye bye.